Your ability to leverage credit can position you to build wealth and build wealth fast. But it's important that you take the time to really understand the realities that surrounds credit leverage. So today we will embark on this journey to really give you a close-up and personal understanding of credit and how credit works. Today we will be looking at the things that you should know. So one of the reasons that there are a number of reasons why I'm going to emphasize there are benefits to credit leverage, smart credit leverage. For example, when you understand what you're doing, it is easy to access between 100 Ks to a million Ks. And this could be done in less than a year, less than 6 months, when you have all the right systems in place and you know exactly what you're doing. So today's program is vital for rising stars in business that is struggling to raise capital. So I encourage you to stay until the end because I'm going to give you a lot of information that you can take away today. The second benefit in understanding credit is that credit uh, gives you access to capital at 0% APR. Now, think about this. You have 0% APR. You don't have to pay interest on the debt for a period of time. You may get 0% APR for 6 to 18 months. And that is a tremendous financial advantage for you. So credit can open up all of these opportunities for you. We will talk about that today. Third, uh, when the life cycle of the 0% APR would have expired, you have a concept that we call balance transfer that extend the life on your 0% APR. You can't ask for anything more. But the important thing here is that you must understand how to leverage credit. Fourth, when you understand credit, is accelerate your business growth because you no longer have that difficulty of accessing capital because you understand a process and you're now able to apply that process to your advantage to grow and scale your business. Understanding credit leverage also is smart approach to build wealth. It gives you a smart approach to build wealth because here is where you're leveraging credit to position yourself to build wealth. You're now able to master, you become a master at leveraging OPM, other people money. And by other people money, we are talking about credit financial institutions, it could be equity investors, it could be traditional commercial banks, whatever it is. When you understand this platform, credit, it gives you a tremendous advantage in this regard. And with all of this, the seventh takeaway, you become a master wealth builder. So stay with us. Today, we're going to be doing a deep dive into this entire body of knowledge. So I trust that you get your pens and your paper and you position yourself to start learning so you can apply this body of knowledge. Now, there's a couple of things that I want to say just before I get into today's program. There is a belief that you can save your way to wealth. Is that true or is that false? In today's world, it is almost impossible for the average person to save their way to wealth. Not that I'm going to hit on savings, but it's important for you to understand the main reasons why you save. There are three reasons that we have identified. You save for emergency. If there's you anticipate that there may be family emergency, you don't know when it's going to arrive. You want to ensure that you have some savings to provide the care and love for your family. The second reason that you save is for safekeeping. You see, when your money is in a bank, your money is safe there in most cases. So it is not under threat by fire or it's not under threat by theft. It is safe. The third and the most important reasons why you save is to accumulate a sum of money that you can now leverage into income producing asset. And this is what we see the majority of people they are not doing. So you're never able to save and leverage your savings into income producing asset to accelerate your pathway to build wealth. So that's something for you to think about. The next concept that I want us to look at just before we get into today's program, for you to really understand the importance of why we are doing what we are doing. Most people are schooled that hard work translates into wealth. Well, for over 80% of the global population, this is not necessarily so. I'm certain that you have many persons in your circle, in your quality circle, that are hard worker, but they're going paycheck to paycheck. And this has nothing to do with your education background, because we are interfacing with persons that have first degree and second degree that are still going paycheck to paycheck, and they're still looking for the pathway that will enable them to build wealth. A couple of things here. Wealth building is not necessarily based on how much money you earn. It is based on how much money you keep and how much money you're able to invest in the smart way on your wealth building journey. So that's food for you to think about. What I want to end on here is that smart debt leverage position you to build wealth. And I repeat that. Smart credit leverage and debt leverage position you to build wealth. And that brings us to our subject of discussion today, because moving forward, it is our vision that you develop the knowledge and you apply this body of knowledge to position yourself to start building wealth. But there's a couple of things that I must do. I must talk about the history of credit. Now, in the US economy alone, we see 70% or 210 million Americans carries a credit card. And that's a very large number, 70% of the American population. Now we see out of that 70%, we have about 34% that has 3 to 4 credit cards. All right. Now, the amount of monies that we have seen invested in the credit card industry in 2022 amounted to 164.3 billion US dollars that was invested in the credit card industry. So you can see a lot of monies are invested here. There's really no shortage of monies here. What you want to do is to quickly figure out how you can access a portion of this capital and leverage it to your advantage. That should be the key focus as we do think about, credit leverage. We have major credit card players like MasterCards, Visa cards, American Express, Discovery, Chase Bank, DV, and so many others that are actively involved in this space. So you have a number of players that are out there with their credit card facilities, and they are giving you an opportunity to access capital. You now have to make a decision whether you're accessing capital as a liability or as an asset. You have to make that decision. Our objective here is to give you enough information so you're able to make smart credit leverage. Now, as we talk about smart credit leverage, one of the things that we are seeing is that 83% or 90 million Americans need help with debt mitigation. What exactly does that mean? It means that they're taking debt, and in taking that debt, they end up creating a liability. And in our experience, we are interfacing with people that are saying that they have been paying their credit card debt for quite some time, but in spite of the time allotted to paying that credit card, paying down on that credit card, it seems as though the credit card is not being paid off. And there are reasons for that. And we will discuss all of that in today's program. Because when you want to bring yourself to that point to leverage credit the smart way, the body of knowledge that you will get today, it will help you on that journey. Now, I must pause a little bit to say that this program comes to you with the kind compliments of Pitch Deck 101 LLC, Global Capital Inc., and 10X Branding and Marketing LLC. What do we do? Pitch Deck, we help you to understand financial instruments. We help you to access capital. We help you to develop smart capital leverage game plan. And most of all, we work with you to ensure that we are helping you to mitigate the debt process. There's a lot to gain by understanding smart ways to mitigate debt. So we are your subject matter expert in this regard. Global Capital Inc. does similar, and 10x B&M LLC, we help you to build a strong brand. We help you to identify your ideal client, and we help you to integrate your brand into the market. To learn more about what we do, I encourage you to go to our website, which is pitch deck dash in the center 101.com to learn more of what we are doing. So, with that being said, let us get into today's conversation. Now, today we will also cover a number of different issues. We will look at credit portfolio. We will look at credit pre-qualifications. We will look at credit leverage, credit mitigation, and of course, we'll continue to look at good debt leverage. So, one of the first things that I want us to begin looking at is credit portfolio. What exactly can one take away from the term credit portfolio? Well, there are three tiers of credit. There is one that is known as the vendor credit, the store credit, and then there's cash credit. What I will do a high level but brief overview of what each of these credit portfolios represents. Now, in terms of the vendor credit, this is level one. So this has tremendous benefits. As a rising star in business, you need to start to build up your credit worthiness. And starting with vendor credit in the case that you don't have any historical financial background with your business is an excellent start. Now, with vendor credit, you are now able to take out net 30 credit lines. You're able to take out net 60 credit lines, and you're able to take out net 90 credit lines. What exactly am I saying here? What I'm saying here is that you may be able to go to the big stores and you may be able to access a line of credit. You can access a line of credit from places like Target, from Walmart, from Granger. These are just some of the institutions that are willing to work with you to give you a line of credit. Now, you can have multiple trade lines and credit lines from these vendors. All right, multiple. What exactly advantage is this bringing to you? Now, let me give an example of this. We have big companies like Walmart, and we have many top 100 companies who, at some point of the life of the business, would have leveraged vendor credit. Walmart today is showing that they have over 500 credit lines with various vendors. And what is it saying? It's saying that if top 100 companies would have used it and perhaps still uses these line of credit, it means that they know something that the majority of rising stars in business do not know. And it means that you want to start taking the time to understand what they know and leveraging what they know to attain the level of success that they have. So let's go into this to really help you to understand what exactly this means. Now, let us suppose that you are want to get into the computer sales business. So you want to get into the hardware sales business. Now, you don't have the capital to start. That's not an issue when you have the right information. When you have the right information and you have a desire to jumpstart a particular business, you can now leverage vendor credit because you may have Target, you may have Granger, you may have a number of other institutions that will set you up with vendor credit, meaning that they're going to open a line of credit for you for 5,000, for 10,000, for $20,000. Now, just think about this. If you have five vendors allocating $20,000 to you in vendor credit, it means that immediately you have access to $100,000. If you have 10 companies doing this, you have access to $200,000. If you have 20 companies doing this for you, you have access to close to $500,000. So what this approach does, it opens up opportunities for you to access a line of credit, and you can outfit your business startup with the equipment, and then you can now start to drive consumers to your place of doing business with $0 down. Because with a line of credit, you have between 30 to 90 days to pay off for this debt. Now it depends on, how your FICO and how everything else about you look. That will enable you to move from net 30 to net 90. If you develop a healthy, or when you develop a healthy history with the particular vendor, they're going to now move you up the ladder to a 90-day credit. The beauty of all of this is that while you get the line of credit, you also have a window of 30, 60, and 90 days, which you have no obligation to pay APR, annual percentage rate, on this line of credit. So you can take the goods, you can flip the goods, you can pay for the goods, you can take again, start the process over again without paying a single dime on annual percentage rate. What more can you ask for? This is smart credit leverage. And the average person with your SSN or ITIN, you can do this. In fact, some of what we do at Pitch Deck 101 LLC is to give businesses the support that they need to leverage this. And our team, we have been working with businesses, and in less than an hour or two, we set them up to access these different types of vendor credit that you can now leverage as a smart means of generating income. For some people, it's residual income because you can leverage all of this while still working your regular 8 to 4 job. It's quite possible. All right, it's quite possible. So this is food for thoughts, and I really want you to pause and really think about everything that is being said here today. And it's not about having the information. What is more important to us is that you take this information and you apply this information to achieve desired results in your life. We are talking here about smart credit leverage, and you want to know that you're leveraging credit to your advantage. All right. No longer say that you don't have capital. Their capital comes in so many different forms. And this is one form that you want to commit the time, talent, and resources to learn it, apply it, and master it, leverage it to start creating wealth for yourself. Now, in terms of the vendor credit, it has a limitation, and the limitation is that you have restricted spending, meaning that if you have a $20,000 line of credit with Target or with Walmart, you can only spend that line of credit at the vendor. But is that really a disadvantage? The main fact here is that you are given access to a line of credit that you can leverage in a smart way to generate residual income for you. So you can do more for yourself and your loved ones. It is an advantage in itself. All right. It is a tremendous advantage in of itself. So that brings me to the second line of credit here, which we call the store credit. Now, everything that I've said in terms of vendor credit, store credit also gives you this facility. The exception here is that with store credit, there is no restriction on spending. So you've proven yourself worthy of credit as a rising star in the credit world. You have taken the credit, you have paid consistently on time, so you have made an impression. So as people look at your credit record, they want to now give you additional opportunities. So here is where the store credit comes into play. With a store credit, you now have a credit card, and you can spend that credit card, use that credit card at the vendor, but you can also use the card outside of the vendor. And that gives you leverage because there are cases that you may have overheads and fixed expenses to cover within your business. And The uniqueness of this particular line of credit, it gives you the opportunity to use the line of credit in your business. So that's a tremendous advantage. So it's important to start thinking outside of the box and stop complaining of not having access to capital because capital comes to you in so many different forms. But again, there's a lot that you need to understand, all right, when it comes to smart capital leverage, smart credit leverage. The third tier is what we call the cash credit. And here's where the big boys now play because you have moved through the ranks of vendor credit to store credit. You have built up a portfolio, a healthy portfolio of financial transaction. Now, cash credit becomes available to you. Now, there's some institutions, they may want you to have, a year, 2 year of business operation, a year, 2 years of historical financial records before they open up their line of credit to you. But what exactly am I saying here with cash credit? Cash credit now refers to the traditional banks. You have DV, American Express, Chase, and Capital One, just to name a few of the financial institutions that may come alongside you and say, hey, you can access capital. You may also have now trade unions coming alongside you. You have community trade unions, credit unions, and you have national credit unions. And this open up tremendous opportunities now for you to start accessing the much needed capital for you to move a process forward. Now, this can be happen fast or this can happen slow, depending on your knowledge of what you're doing. Because there's one thing to open up the net 30, 60, and 90, but how do you leverage the net 30, 60, and 90 to start building up a healthy paydex score? It is quite another conversation. All right. It is quite another conversation. And we will look at some of that today. Now, let me make a few points here. Everything that I've just said here in terms of vendor credit, it could be leveraged on the personal side, which means that you're using your FICO score to do all of this. And it could also be leveraged on the business side, now means that you're leveraging your PAYDEX score to do all of this. And here is where you want to be. You want to be able to leverage your business data to take out these lines of credit to start building up your PAYDEX score. Why? Because what you're able to achieve leveraging your personal credit is not as significant as what you can do when you're able to leverage your PAYDEX score. So PAYDEX is taking you to the 100. Your FICO is going to take you in the tens, and that's a major difference. All right. Now, I don't want you to really pause here. So you want to be able to have the right information, apply the right information that is going to serve you best in terms of access and open up lines of credit to you so you can do more in business and in life. So the next concepts that I'm going to be looking at here is what we call the credit pre-qualification criteria. Because there are pre-qualification criteria to start to access uh, these trade lines. All right. Vendor credit, store credit, and cash credit. Now, on a personal side, what are those pre-qualifications? You need to have your SSN. And what do I mean by your SSN? It's your social security number. As an American citizen, that's a walk in the park. I mean, you already have all of that. All right. You also need to have, as a foreign national, your ITIN. All right. You need to have a fixed place of address. You need to have your contact number, your telephone numbers. And you need to also have a strong FICO score. Now, many persons I'm aware of struggle with a strong FICO score. As I said, above 90 million Americans are struggling with not having a strong FICO score. So the person that are affected by this is a tremendous amount of people. And there are ways in which we can fix that. But once you are able to put yourself in this position of strength to have these simple pre-qualification criteria, you are now set, all right, to access credit, leverage credit in a smart way to start to position yourself to build wealth. All right. We have great minds like the Robert Kiyosaki, who leveraged credit to get into real estate investment. And from the time he got into real estate investment, there was no turning back. He leveraged credit. So everything that I'm saying here to you is applicable to you also. Now, there are pre-qualification on the business side, and I want to spend some time talking about this because I want you to get this right. First of all, you want to build up a strong FICO score. So, regardless of if you're in the 500 or 600 or below, we can help you get your FICO score back up into the 700 and into the 800. We can do that. We are doing this with clients, all the time. So, what it takes to build a health business credit, all right, what it takes to do this. So, I'm going to walk you through a couple of things now to ensure that you have this body of knowledge. Now, one of the first things that you will do when you're attempting to leverage business side of things to build business, you want to register with the Secretary of State. You want to get your business license. But getting your business license is not the beginning and the end. There are many businesses that we're interfacing with that you have your business license, but you're still not fundable because there's one thing to start a business and there's quite another to start that business manner that makes it fundable. So everything that I'm going to be going through here today is going to ensure that you're set up, you are fundable. It's important. So you want to get your business license. You're going to get this from the Secretary of State. So whichever state you're in, you need to get registered with them. As you register, you're going to get your EIN, and then you're going to, as a foreign national, you would get your ITIN. So these are some of the groundwork that you would need to do. All right. So you can do this by yourself. You can get someone in, close to you to do it, or if you need help, you can reach out to us, and we will be happy to help you with this. Next, you want to get your DUNS number. You get your DUNS number from Dun and Bradstreet. Now, with your DUNS number, you can now start to build up your paydex score. There are practical things that you would need to do to build up your paydex score. Now, let me link this back now to everything that I said early on in terms of vendor credit. Now, when we look at vendor credit, store credit, and cash credit, when you know what you're doing, you're taking this entire historical data and you're now linking it to your paydex. And when you link this to the paydex, every single thing you do at the vendor store credit level, all right, it reflects back here. And that sets the stage up for you to start building a healthy paydex score. All right. So think about this. If you need help with this, remember, reach out to someone or contact us. We'll be happy to help you with this. Now, you want to ensure also that you are listed, you have a 411 listing. All right. This is where, major companies are listed. This is where companies are able to get visibility. So when you pull the directory, you're able to see you're listed here. And financial institutions, they may do these type of due diligence to ensure that your business is set up and your business is set up properly. And these are things that they're looking for. Do you have a social media presence? They're going to be looking for this also. So you also need to ensure that you have a social media presence. Do you have a business bank account? You need to have a business bank account. All right. If you don't have a business bank account, it's going to raise the red flag in terms of how the business is set up to receive funding. Because when these institutions are going to allocate funds to you, they're not going to make it payable to you. They're going to have it payable to the bank. All right. So these are important concepts for you to understand when you're attempting to set up your business properly, ensure that your business is fundable, and ensure that you're now taking practical steps to access the capital that you need to move your business forward. As I said, a lot of money is available here. You can access between 100K to $1 million in a short period of time when you know what you're doing or you have people around you. that can help you with this. Do you understand your SIC code? Do you have your SIC code, which is your standard industrial classification code? Now, the code is important. Whether you know it or not, knowing this code is so important because when you don't know this code and you go to do financial transactions, you go to access capital, the financial institutions are going to be looking at your SIC code. And when they cannot identify because you have not identified your code, by default, they may put you in a high risk category. And what that means, it means that you may be denied access to capital. And even when you're given access to capital, you're given a low amount and you're given a low amount at high interest rates, high APR. So understanding your SIC code is important. And when we talk of setting up your business properly, all of this is what is relevant to what is being discussed here. You need to know it. Ensure that you're working with the subject matter experts that understand this and can help you navigate this entire process. Because failing to do this, you may be paying a high cost for capital, but in fact, your category should have enabled you to be paying a much lower sum for the capital that you get access to. There's also the NACE code, and the NACE code is the North American Industry Classification System. This is also important for you to know. You need to know this. And you have the business, how it is set up, you might want to have uniformity. For example, the name that is with the Secretary of State is the exact name that you want showing up on your DNB, on your 411, and your bank accounts. You want uniformity here because when there is inconsistency and the financial institutions now are doing their due diligence and they are not seeing the consistency, they're going to say you're not traceable, you're not visible. And because of this is another reason for you to be denied. So it's important for you to be aware of these things when you're setting up your business in a proper way to now start to access capital. So what you should take away here on the personal side of trade lines, it is very easy. It's a walk in the park. On the business side of things, it is also easy when you know what you're doing because everything I've talked about here, 90% of it can be set up in a couple of hours. All right. Let us say 48, 72 hours. All right. There are some parts of it that you might have to wait for the process to go through. It may take 2 weeks to a month to have it set. And from there, you're well on your way to building, healthy business portfolio that everybody wants to do business with. So this is quite easy. All right. So think about everything. Do take notes. Do reach out to us in the event that you need more information on how to move this process forward. Now, there's a couple other things that I want us to look at today. Remember, if you find this program interesting, do like, subscribe, and do share this information into your community where you know it can bring benefits to rising stars in business. Now, let's get into this. Let's talk some more about smart credit leverage. You see, in doing leveraging credit, it's about data. You don't want to be making what we call front end market analytics. Front end market analytics is when users hear something, see something, and you're taking action based on that. And then you take action and you end up into problems. Like, for example, you now know how to, you're now accessing cash credit. So you take cash credit and you go invest in stock bonds and mutual funds and hedge funds without taking the time to do any market analytics. So as you start to position yourself to access credit lines, you want to be certain that you are doing what we call the back end market analytics. This is so important because The last thing that you want to do is to be taking credit or taking debt and putting it into liabilities. That's going to cause you stress and sleepless nights, and it's going to hurt your pocket, perhaps for a long time. You don't want to be a statistics when it comes to leveraging your capital to build wealth. You don't want to be making emotional decisions. When it comes to capital investment, emotion has absolutely no space in the decision making process. No space. You want to be data driven. So you're using data to inform your business decision making processes. You need information. Again, I can't emphasize this enough. The reason why you have over 53% of American credit card users that need support in debt mitigation, it is most likely because they would have made an emotional investment decisions. You need data. Now, data means a whole lot. If you don't fully understand it, you owe it to yourself to get the right mentor, the right coach, the right supportive community on your side that can help you unpack this and make solid investment decisions that will keep you smiling and happy for a long time. You don't want to make it that is going to send your blood pressure up. You owe it to yourself to collect the right information, analyze the right information, and leverage this information in the right way that serves you and your family. If you can do it, get a mentor, get a coach, get the right support systems that can really help you to make smart investment decisions. Of course, today we are talking about smart credit leverage, and you need the data. Just don't take this information and get out there and believe that you're a subject matter expert and you put yourself at risk. I want you to start thinking of innovative and creative approaches that you can use to achieve a desired end result. And the desired end results that we're talking about is to position yourself to build wealth. Get the right team members, the right mentor, coach, and support systems. Now, I want to talk about a couple of things. I want to talk about as you take debt, one of the things that you want to do is to put that debt into what we call smart income producing assets. But do you know exactly what are smart income producing assets? Let's take, for example, you want to invest in real estate. And I do see real estate as smart investment and portfolios. Of course, there are exceptions to the rule because you need to know what you're getting yourself into. You don't buy a real estate because it is cheap. You buy real estate because it makes financial sense. All right. In the business term, you're not buying because it's cheap. You're buying because it makes smart investment sense. Because you may buy a piece of real estate that is cheap and you didn't look at functional deficiencies. You didn't look at economic obsolescence. And because you didn't look at these things, you made an emotional decision. You buy a property that is cheap that cannot cash flow. That is not smart credit leverage. It's not smart credit leverage. When Robert Kiyosaki leveraged credit to invest in real estate, it was a smart investment decision. And you want to bring yourself to master that type of decisions and or ensure that you have people on your side that can help you through this process. And what smart credit leverage means in terms of real estate. There's a concept that we call the PITI, principal and interest tax and insurance. So as you think about investing in real estate, you're thinking about this principal and interest tax and insurance against the income potential of the real estate. And once you are seeing cash flow that is above the PITI, it means that you're able to pay your principal. It means that you're able to pay the interest on the principal. It means that you're able to pay tax and you're able to pay insurance and you have residual income that you're going to call your net income from the estate that you're invested in. So the asset in itself is going to be cash flowing above and beyond all overhead expenses associated with the particular assets. So there's a lot of things to be looked at here. And there's still other things that I will not mention in this particular program that you need to consider. Get a subject matter expert on your side that can help you see these realities, navigate you through the process so you're able to make smart credit leverage into smart income producing assets. Now, income producing asset can also mean, transportation services. And I want you to think about this. You can take credit and you can leverage credit to own a vehicle. That vehicle is now leveraged into providing transportation for, it could be foreign nationals that are coming in and they need vehicles to move around. The average cost for these vehicles on a weekly basis is about 500 US dollars. So if you have a steady flow of clients on a monthly basis, you now have an income of $2,000 from one vehicle. And the cost of that vehicle, your monthly debt obligation for that vehicle may be less than $500. So you walk away with $1,500 in terms of residual income. And you just purchase the asset. You, in this case, you're leveraging credit or no money down, and you build your advertising campaign. You pull people, you create visibility, reach, and impact. There are systems that you can use to build out all of that so as to ensure that you have a steady flow of customers. And all you have to do from that point is relax and you earn income. So if you're able to do this once, now let us suppose that you have 6 vehicles. You're significantly able now to 10x this source of income. You have 10 vehicles. You're now able to generate approximately $15,000. On an annual basis, you're now able to generate approximately $180,000. $180,000. The average American today is not even working for $60,000. And here is where, because you have creative thinking ability, you're learning these systems, you're applying these systems, you're now able to leverage credit in a smart way to create residual income for yourself. Remember, it's not enough to have the knowledge. It's equally important to apply the knowledge, because it is only when you apply the knowledge you're able to get the results that you want in your life. And if you don't know how to apply it, if you're not courageous enough to apply it, get a mentor, get a coach, fall into a support community that can help you through this process. Ask for help. It doesn't hurt to ask for help. All right? Ask for help. I want to encourage you again to reach out to Pitch Deck 101. Our website is pitchdeck-in-the-center101.com, and learn what we are doing there and learn what we can do to help you. What we specialize in is helping you to understand financial instruments, helping you to access financial instruments, meaning debt, equity, credit, creative financing, and hard money lending, helping you to develop smart leveraging game plan, and also helping you to mitigate that debt, meaning that mitigation means that you're reducing the debt life cycle, reducing the debt cost. So you have the equity much earlier. That gives you greater equity leverage and greater opportunity to grow your wealth. That's the role that we play. From the 10X B&M LLC, we help you to build a strong brand image that is creating impact with your team, impact with your ideal client, impact with the public, and impact with your business cash flow. 4 points of impact. And then we walk you through the process of how to build visibility, reach, and impact how to optimize client conversion, how to build confidence, trust, and credibility in the eyes of your critical stakeholders. That's the role that we play. And we're here to give you that type of support to ensure that you win in business and you win in life. So feel free to reach out to us. We'll be so excited to talk to you. Now, there are other smart investment asset portfolios, and these are no recommendations. I'm just sharing with you my knowledge. When you become a client, we will then give you professional advice. They have stocks, they have bonds, they have mutual funds, they have ETF, they have hedge funds. But remember what I said earlier. In making any investment decision, remember it's an investment, it's not a gamble. The last thing that you want to do is to take your hard-earned money or to take credit or any form of capital and gamble with it. That's the last thing that you want to do. So if you're making emotional decisions, which we call front-end market analytics, you are attempting to gamble. But when you pause and you do what we call the back-end market analytics, means that you're taking the time to understand the portfolio in which you're going to invest in. Here is where you're making informed and educated decision. The type of information that you need to get is the historical performance of the company that you want to invest in. You want to understand their team dynamics. You want to understand their history in making payments. You want to understand their short and long-term vision. You want to be certain that they have the right team to move that vision forward. These are all back-end analytics. And when you're making emotional decisions, you don't have all of this information. So you end up hurting yourself. And that's the last thing that we want you to do as you position yourself to grow and scale your business and as you position yourself to start building wealth. You want to be in a position of strength where you have the critical information to make informed and educated decision that best serves you. Now we talk about credit mitigation. And to be able to mitigate credit, there's a number of things that you need to understand about credit. So to help you understand how to mitigate credit, I will walk you through a process of things that you need to understand. So we call this credit card fundamentals. Do you understand the fundamentals of credit card enough to be able to mitigate credit? And by mitigating credit, what do I mean? Are you able to influence how much interest you paying for the cost of capital? And there's so much more. So we will look at credit card fundamentals and we will also look at credit card builders because you need to understand all of this. If you're able to build a healthy credit score, by default, having a healthy credit score means that you're in a position of strength to negotiate your APR. All right, financial institutions will automatically say this is a good paymaster. He has healthy credit score. Let us give him a lower APR. And you want to be fully aware of this. So let us do a deep dive into what exactly I'm saying here. Now, in terms of the concept that we call credit card fundamentals and mitigating credit, there's a number of things that you need to consider. What is your statement? What is the balance on the statement? What is your billing cycle? What is due date? And what is the minimum balance due? Important concepts for you to learn, apply, and master. You want to have super control over this. And very often we see persons struggle with this, understandably so. But to remain here is not advisable. You need to have the knowledge, or at least ensure that you have a mentor, a coach, a support system behind you that is helping you to understand this and is helping you to navigate this process to your advantage. So let's begin by looking at the statement. When you look at the statement, there's a couple of things that you want to take away. For us, there's three important things that you want to take away here. One is your credit limit. This tells you the amount of your credit lines, and you want to know this. It's important because there's a concept that we call utilization ratio. And if you don't know the credit line, the possibility exists that you may always be above your utilization ratio. And being above your utilization ratio, when you don't know what you're doing, is going to affect your FICO score. And of course, again, we talk about having a healthy FICO score because having a healthy FICO score is what's going to help you negotiate your interest rates. So understanding your credit limit, your credit line amount is important. Now we talk about credit utilization. It is said that your credit utilization, it should not be above a certain percentage. You want to keep track of how much money you're spending from the line that you have available. You want to keep your finger on the pulse here. You want to ensure that you have this type of knowledge. You know exactly what is happening here. You're in super control of what is happening here. You're in the know. So your credit limit, your credit utilized, you want to know how much money you're spending from your credit limit. And last here, you want to understand your remaining balance. Remaining balance. You want to keep your eyes on these things. If you don't understand these things, you're not going to be able to manage your credit cards properly. You're not going to be able to mitigate them. Now let's go over to the balance. What exactly is the balance saying? And we see many persons get somewhat floored and confused with what is being said here. Because on the statement, you may see balance, but you're not able to distinguish whether they're referring to outstanding balance or remaining balance. Now, the outstanding balance is the money that you owe. The remaining balance is the monies that remains in the account that you can or should not spend. And sometimes you look at balance and you see 5,000 balance and you think that, hey, I have 5,000 more to spend, when in fact, it is saying to you, you owe $5,000. So we see that many persons that we're interfacing with, they're not able to effectively dissect this and to make informed, educated credit card management decisions based on that statement that they have in front of them. So again, we have to go and we have to work with them. We have to correct this process. Then next we have the billing cycle. Now, what exactly is the billing cycle saying? This is so profound in the scheme of credit card fundamentals. You see, on the billing cycle, it tells you two things. It tells you when to start spending, and it tells you when to stop spending. This is what the two main takeaway that you want to have here. The thing about it, the average person, you have a credit card, but it never occurs to you that there's a right and wrong time to start spending and stop spending. So you spend any old time. And because of this, you end up shooting yourself in the legs, not once, but you shoot yourself in the legs on steroids. You hurt yourself. And that's the last thing that you want to do. You want to make sure that you have the body of knowledge that is helping you to make informed and educated business decision, credit leverage decision. All right. So I'm trusting the next time you get your statement, you can do that deep dive based on everything that we're saying here. The open date tells you when to start spending. The close date tells you when to stop spending. And why is so? Because just as the close date, you have Equifax, Experience, and TransUnion that are going to come and do a sneak peek into your financial transactions. And when the close date comes and your utilization is above 30%, they will generate a report on your credit utilization. And if that report is not favorable to your spending habits, it's going to start to affect your credit score. And you lose that negotiation power when it comes to your APR, annual percentage rates. And these are things that you want to be in control of because you can call the credit provider and you can say, hey, My credit has significantly improved over the last few months, and I'm entitled to favorable consideration to reverse my APR from 22% to 16% or to 10%, depending on how well you're doing with your FICO. The next concept that I want us to look at is your due date. Your due date also is saying a couple of things. It is telling you balance. It is encouraging you to bring the balance down to zero. In our context, this is what it should be saying to you, and this is what you should be hearing. From the time you hear due date, you should be asking yourself, is there a creative way for me to bring the balance down to zero? Why is it necessary for you to think in this way? Because let us suppose that you pass the close of the billing cycle, but you're able to capitalize on the billing cycle and the due date, and you reverse this process. You have another window here to reverse your process. Because with this here, you don't have a balance carried over. There is so much that you need to understand about the credit process. So when you want to put yourself in that position of strength to leverage credit in a smart way, in a way that is allowing you to carry up your FICO score, negotiate APR, and build wealth at the same time, what I'm saying here is so important. So your due date should be saying this to you. How can I bring my balance down to 0%? Your ability to do this will allow you to avoid balance carried over. And what balance carried over means is that if there is amount outstanding after the due date, the outstanding balance will be immediately carried over and it will immediately be subject to APR. So when you're able to do this, bringing the utilization down to zero, there's no balance carried over and there's also no APR. And there's smart, creative ways to do this. I will not get into all of that today, but for our clients, for our community, we will continue to give you these tricks and these hacks that you can apply to doing business. So you are always building a healthy credit score on your FICO side and on your paydex side. The last concept that we're going to be looking at here is what we call the minimum balance due. Now, remember I said earlier on, there are many persons that are making payments to their credit card, but in spite of this, they have been paying their credit card for many months and years, and the balance outstanding does not seem to be reducing. Now, this is happening because of a number of factors. The minimum balance due says to you, okay, you have taken $100,000. The minimum balance that you should pay on this is $500 or $1,000. And when you pay the minimum balance, it has tremendous benefits, yes, because it avoids you from having late payments. It avoids you from having derogatory. But once you make the minimum balance due, while it has benefits, it has massive disadvantage to you, the consumer. And if you don't know this, you put yourself at a massive disadvantage. And the disadvantage that you will have is everything that I talk about when I talk about due debt. When you pay the minimum balance due, the outstanding balance becomes a balance carried over. And the balance carried over is subject to annual percentage rate instantly. The beauty about credit, however, is that credit is not calculated on an amortization schedule like how a loan may be calculated. It is calculated on simple interest. So the possibility exists that you can reduce interest payment based on your speed of settling that debt. So let us suppose you have a balance carried over, and the balance carried over was only for an hour or 24 hours. Interest is only calculated on that period. With a loan, it's different. So there's so much for you to understand here. I trust that I have unpacked this in a way for that you understand it. But remember, you need this information. So get a mentor, get a coach, get into a supportive community that can help you to better understand credit and how to leverage credit in a smart way to build wealth. And so you can do more for yourself and your loved ones. Now, there's another concept for us to look at here, which we call the credit card builders, 5 credit card builders. Again, if you don't know this, you cannot leverage credit in a smart way because you may access credit, you may be able to leverage credit, but because you don't understand the factors that are influencing the ebb and flow of APR, you left yourself exposed. And that's a lesson that you want to do. That's a lesson that we want our community and our clients to be doing. So let's talk about this. There is a concept that we call payment history. So payment history accounts for 30% of what is reported on your FICO. So you take a credit, and the credit card companies will either supply information to Equifax, Experience, and TransUnion if it's on the personal side. If it's on the business side, they're going to have other institution that is going to take that data, and they're looking at number of on-time payments. Are you making payments on time? They're going to be looking at this as part of your payment history. They're going to be looking at the number of late payments. Are you making late payments? Late payment will affect your FICO or paydex. Number of early payments. Number of early payment is going to affect you in a positive way. So they're going to be looking at these things, that they're looking at your payment history. Again, if you don't know this, it may hurt you because you may pay a day late, 5 days late, a week late, two weeks, and you think that's okay. But a report is being generated here, and investors are looking at these report, to make an informed and educated decision whether or not they should invest with you. But if you don't know this, you don't know practical steps that you can take to put yourself in a position of strength to start to access the much needed funds that you need to move your vision forward. Second, you have the utilization ratio, which I spoke about early on. Now, the utilization ratio accounts for 30% of what is reported on your credit score. And utilization ratio, there's a saying that credit utilization should not go above 29%. The amount of monies that you're using from your line of credit should not go above 30%. And what am I saying here? If you have a line of credit of $100,000, you should not spend more than $29,000. Because if you go above this, it raises a flag, utilization ratio. But is this statement true or false? The statement is true for those who don't know how to use credit card, but the statement is false to those who know how to use credit card, because you can max your card out. And I'm not telling you to max your card out if you don't know what you're doing, but you understand the period that you need to reverse this max out to either below 29% or to 0%. So when Equifax and Experience or TransUnion take that sneak peek, you're still looking perfect. So they can't report anything negative on your FICO. But do you understand how to leverage this? So the point here, if you don't know how to leverage credit card, don't ever spend above 20, 30, 29%. But when you know what you're doing, you can max it out because you understand how the management process of credit works. The next concept that I want to share is length of history. Now, the length of credit history represents 15% of what is reported on your credit card. So the length of your credit history is reflected in how long you have credit. And again, financial institutions are gathering this data to make a decision as to whether or not they want to open a line of credit to you. And this is why some credit institution may say, before you get credit, you have to be around for a year or 2 years. They're looking at this. It represents the number of years you have credit, the number of credit lines that you have. But let's look at this. Is there a way that we can legally fix this problem for you? Because let us suppose you're a rising star in business, you're now started. You don't have history. You don't have length of history on your side. You might want to say this is not fair. It's a disadvantage. You got to wait a year, 2 year. While you wait, you got to build up history. If you don't build up history, they still wouldn't have history and they're still not going to do business with you. You might say that's fair. Perhaps you're right. But is there a way? The important thing here is there a solution, a legal solution? And yes, there is a legal solution. All right. We call it trade lines. I'll get into that another time. But there's a way in which you can take out a trade line. And you can do this with family, friends, or you can do this with, willing participants who can take their history and give you their history. And this could be done legally. And this in itself gives you accelerated access to credit. Let me give you a simple idea as to how this can work. Now, you set up an LLC, a S Corp, or a C Corp, but you who don't have the history, your partner or partners, they have been leveraging credit line for 5, 10, 15, or 20 years. Because of the fact that you have them as a partner, their credibility, their length of credit history benefits you. Now let's look at mix of account. I'll give you some solutions there. The mix of account, this really accounts for 10% of what is reported on your credit score. And when we talk of mixed account, we are talking about installment loans or revolving loans, revolving debt. Installment debt may be things like car loan, student loans, and mortgage. These are some of the installment debts that you can have. And financial institutions that are doing business with you, they are looking at you across the spectrum. They're looking at you in terms of how you're managing vendor credit, store credit, how you're managing cash credit, how you're managing student loans, how you're managing, property loan, how you're managing your car loan. And this sum of knowledge is what they are using to make an informed and educated decision about your ability and worthiness to access credit. They too are data driven. And in our platform, we talk a lot about data. In business, if you don't have data, you don't have, a strong brand. But these companies too are highly data driven. Revolving loans is going to be the vendor credit, the store credit, the cash credit. It's going to, some of what the credit unions are doing is going to fall under this category. So they're looking at the spectrum, how you're interfacing with this spectrum, and how you're managing the portfolios that you have within this spectrum of the financial market. They're looking at this to make an informed and educated decision. It shows that you have the ability to manage across the various spectrum. And when that happens, it bumps up your credit score and it brings down your APR and it opens up tremendous opportunity now for you to access capital that you need to move your vision forward. The last concept here that we're going to be looking at is what we call new accounts. New accounts accounts for 10% of what is reported on your credit score. Now, and this is something that you need to watch. You need to be very, watchful of the number of credit cards, new accounts that you're opening. Because every time you attempt to open a new credit card, you have what is known as a hard pull. You may have a hard pull or a soft pull. Soft pull may not affect your FICO, but in most cases, the hard pull does. It becomes an inquiry. And within a given period of time, there should only be X amount of inquiry that is showing up on your report. And when this happens again, too much of inquiry shows desperations to access capital. Desperation to access capital say, hey, this is a risk factor. It may not be necessarily that case, but when they look at the data, that's what they're seeing. And is there a way to remove the inquiries? Yes, there is. Your subject matter expert should be able to help you to remove these inquiries. So when it really matters, it doesn't show up on your report to affect you from accessing the much needed funds that you need to grow and scale your vision. So these are important concepts that I trust that you have taken note of, and it's essential for you to know this that we talked about today when you want to put yourself in that position of strength to manage credit the smart way, to leverage credit the smart way, to leverage credit to build wealth. It's important. If you don't understand this, you can shoot yourself in the legs, not once, but on steroid. Multiple times you're shooting yourself in the legs. So you're laming yourself financially. Now, I would have mentioned to you early on that when you understand this entire ecosystem of credit leverage, it opens up tremendous opportunities for you, tremendous benefits. Now, can you imagine as a rising star in business or in your life, you're now able to access 100 Ks to a million Ks at ease? At ease. It is quite possible. We have the relationship with multiple institutions. We work with our clients to ensure that their business is set up and they are fundable. And then we bring in our partners that is going to work with you to bring you to that point where you're now able to access the much needed capital that you need to move your vision forward. So if you're looking for credit, business credit, to start and grow and scale your business, we can help you with that. All right. And one of the things that I should have mentioned is that credit is perhaps the lowest hanging fruit. You can access capital with no guarantees that you can now leverage into your business. The only thing you're using here is your FICO, your credit details to guarantee the fund. You don't have to have the collateral, but you can access the fund and we can help you through this process. All right, we can help you through this process. So think about this. You set your business up properly. You have the right mentor, the right coach, the right support community that can help you access 100K to a million K, $1 million in a short period of time to move your vision forward. So whether you want to start a business and scale a business or you want to get into real estate investment, this fund is available for you to access. So we can help you with that. The beauty about working with us also is that you're now able to access this capital at 0% APR. Can you imagine that you're accessing capital for 6 to 18 months and you have no interest rate to pay back the bill? I mean, I can recall I was talking with a doctor and We were trying to help her to access some funding. And when the conversation started, she said, "Is it true that you can access capital at 0% APR?" And I said, "Yes, it's quite common in our, ecosystem. It's quite common." And it sounds so unbelievable. But I'm saying to you, it's possible. This is about how we negotiate with our partners. And even outside of the negotiation process, it's about how much you know about credit card management, credit management. Because divorced from your negotiation with these institutions, what you know will make a major difference in how much APR you pay, or if you pay APR at all on the debts, the credit that you're leveraging. So everything that I've gone through here today, I want you to look at this program, listen to this program, repeat this process several times until the information sticks. And if you need additional support, feel free to reach out to us. All right. Contact us at pitch deck, pitchdec dash in the center 101.com. Go to our website, look at what we are doing, make contact with us, send us an email. We'll be happy to talk with you and help you through your business growth experience. Now, balance transfer also allows for the extended life of your 0% APR. But of course, if you don't understand what I'm talking about, the balance transfer, you can apply it. Get a right mentor, get a right coach that can help you with this. So you understand financial instruments and how to mitigate this process to your advantage. You need to have this type of information. Credit also gives you accelerated business growth. We're talking to business leaders who have been struggling to raise capital for a year, 2 year, 4 year, 5 years, 10 years, trying to raise capital and just can't do it on their own. And guess what? With the right support team on your side, the right mentor, the right coach on your side, you can have the information in a short period of time that will accelerate your business growth. Yes, it's possible. We do it all the time. So we know what we are talking about here. Step 5 is smart approach to build wealth. Can you imagine a smarter way to build wealth that you access in capital because you know the financial instruments, you're leveraging the capital, not making emotional decisions, data-driven decisions, and you are mastering capital mitigation. You understand how to mitigate the process, or you at least have your team players on your side that is working you through this process. Is there a smarter way to build wealth? I already explained you can save your way to wealth. And for over 80% of the global population, you can work your way to wealth. You're going to remain on that paycheck to paycheck cycle. I said, when you save with three objectives. You save for emergency, you save for safekeeping, and you save for investment. In this case, you don't have to allow these savings to accumulate because you can have instant access, speed access, quick access to credit facilities that can literally accelerate how you apply yourself to build wealth. You don't have to wait. So if you don't have to wait, why wait to start building wealth? Take action. It's not enough to have the information. It's equally important to bring yourself to that point to take action. In this case, we're talking not just action, inform action. Because you have the mentor, the coach, the support community who have been there, done that multiple times, and they're there, here at your side, right here, waiting on you to support you to achieve your dreams and your hopes and your aspirations. You master this and now you become a master at leveraging OPM, other people money. When you take credit, it's OPM. When you take a debt from the financial institution, it's OPM. When you bring in an equity investor and they're invested in your vision, OPM. You become a master at leveraging OPM and you become a master wealth builder. So all of this is possible with us on your side, with the right team players on your side, Our role is to ensure that you have this type of information so you are able to make informed and educated business and life decision. Now, I want to leave you with this. We have just written a very unique book titled Master the Sales Communication Process. And you owe it to yourself to get a copy of this book. Why? It's not enough to have the knowledge. So let's talk about knowledge versus informed action. The beauty of getting this book, Master the Sales Communication, and go to my website, pitch deck in the center 101.com. Go to the website, get the book. When you go to the website, go to shop, look on your left, you will see books. When you press books, you will see all the books there. There's 3 volumes that is out right now, volume 1, 2, and 3. If you can get all 3, get them. And when you get these books, if you get volume 1, what we're going to do immediately, we're going to bring you into our Wealth Mastermind community. And we will give you the mentorship, the coaching, the support to understand what is being said in the book and help you to apply these concepts into your business and into your life. And in this book, you have so much more than what we talked about. What we talk about today is just scratching the surface. You're going to learn about credit card system, but you will learn so much more about business leadership concepts. You will learn about what is sales objective? You want to be known, liked, and trust, how to master this process. We talk about the influencer model, and we talk about making the sale and how to convert first-time users into lifetime customer. You would understand this. But along with this, you will also understand what is the sales process, how to command attention, pique interest, arouse desire, move the client into action, make impact, build confidence, trust, and credibility. You will understand about the communication process. And all of these things are so, so important in building a business. Get the book. We're going to bring you into our community and we're going to work with you. We're going to work with you. You're going to have weekly mentorship groups. Get the book. We will give you weekly mentorship. The website to go to is pitch deck in the center 101.com. Pitch deck is spelled PITCH DECK in the center 101.com. Go to that website. Get the book. Now, get the book. You can't afford to miss this. You have been procrastinating for too long. This is the time to take action, take your life into your hands, and make a conscious decision that moving forward, you will be the author and the maker of your dreams and your hopes and your aspirations. Now, as a rising star in business, if you need financial support, we're going to help you with that too. We're going to help you access debt, equity, credit, creative finance, and hard money lending. We will help you with that. We will give you comprehensive business support. Who is we? Pitch Deck 101 LLC, 10X B&M LLC, and Global Capital Inc. We will give you comprehensive support to move your vision forward. So I encourage you to take action now. Take ownership. Remember, the knowledge is one thing, but it's how you apply this body of knowledge that makes the big difference. We're not going to leave you alone to make and apply it yourself. We're going to come alongside you with the experience that we have, with the experience that our community have, and we're going to support you until you reach that point of your success. All right, so I trust you would have enjoyed today's presentation. It has been such a pleasure being with you today. We have spent the last hour and a half in this presentation, and I'm truly, truly trusting that you enjoyed every bit of what we talked about today. My name is Gary Thompson. I am the Director of Private Equity Investment at Pitch Deck 101 LLC. You have the website, so do reach out to us. We are looking forward to talking with you, hearing about your story, and everything that we can do to help take your life to the next level of development. We are here for you. So with that being said, remember to like, subscribe, and share so you will be the first to get these programs that we bring into you on a regular basis. Be blessed and see you soon.